Hello, welcome to the Money Café. I'm Stephen Mayne, contributor and intelligent investor, founder of Crikey and shareholder activist.
And I'm James Thomson, senior Chanticleer columnist at the Australian Financial Review.
Now, James, the boss is away. The mice will play. Where do you want to start? With, not dictator Dan, but Beijing. I mean, you're following all the action in Beijing. It's incredible, isn't it?
Look, I do love myself a military parade. I'm never quite sure what us ordinary folk should make of it. But I must say the whole Dan Andrews thing has been a big story down in Melbourne where we are, Stephen. What was he thinking?
Yes, well,
you're a former advisor to a premier.
Obviously. I mean, Bob Carr said on 7:30 that he wouldn't have allowed those pictures. I mean, I thought the piece in the AFR was interesting about the handshake with President Xi is a very useful asset to have if you've got a business in China.
Yes.
And there's a long tradition of former Australian politicians advising on China business and those things. But I think it's a very strange thing. I mean, at the end of the day, it doesn't actually mean anything. It's all just about optics, but it's certainly getting a big run here. But for me, the worst optics were just President Xi and Modi and Putin giggling, cuddling, holding hands, and the president of Iran, and the message from China of supporting Putin given Ukraine. It was I haven't seen anything quite like it in terms of the messaging from the non-democratic world when a war's going on.
Yeah, no, you're absolutely right. It's the way geopolitics almost hasn't seeped into markets when you've got things like that. It is surprising. You'd think we'd be seeing a bit more fear on markets when you have that flex from the likes of Putin, China, and Kim Jong-un. But I don't know. I agree. It's not a great look. And I think, is this what you get when you've got someone like Trump in the White House who's sort of created this, pushes people to join one camp or the other? I mean, the poor old Indian Prime Minister, he was great friends with Trump, he thought, just not too long ago. And now he's buddying up with Xi.
Well, that's right. And Modi's view is that Trump was way too friendly with Pakistan with the recent blow-up. And then slugged him with tariffs, massive tariffs on India. So, of course, he's going to send him into the other camp with something as stupid as that. I mean, how could Trump invite Putin to American soil, roll out the red carpet literally, and then tariff India for buying Russian oil? I mean, It's just – Americans are the biggest producers of oil. They probably think the Indians should be buying American oil. Okay, there's a bit of an argy-bargy on a market's point of view, but he's played India all wrong. But it's just surprising. I mean, Modi must get some blowback, you'd have thought, because it's a democracy. But look, it's just incredible. And meanwhile, back in America, I was watching Fox News for a few hours last night. It's all Trump's going into Chicago. Trump's, executing 11 Venezuelan drug mules, blowing up a speedboat. Yeah. Everyone's in uproar over RFK and the administration, the drug administration, and then everyone's going crazy over Epstein again.
Yeah, it's the flooding the zone tactic, Stephen. It's so effective, isn't it? Like no one talks about anything that matters because there's all these other things to talk about. It's a TV tactic. You change the conversation every third day. That Venezuelan thing. I mean, we're way off the Money Café reservation here, Stephen. But you saw the gunboat attack on the Venezuelan drug ship. I mean, I saw someone make the good point. Why didn't they just let it get closer to US soil and capture it and arrest everyone on board like the Coast Guard usually does?
Well, it's run of the business Coast Guard stuff. So, I mean, this is the point, to have the leader of the free world gloating about, basically, can argue murdering drug mules. I mean, rule of law, process, evidence. I mean, this is the worrying thing about it. And But what about all the 5 days absence? There's all these rumours everywhere that he's had a medical episode, and this was after his longest ever public event, which was a 3.5 hour fawning live to television cabinet meeting where all these cabinet members are saying he's the greatest person ever for literally 3.5 hours.
It was amazing. I mean, I do like the reports of his death are greatly exaggerated. Anyone who can stay on camera for 3.5 hours, I mean, it's an epic session. You think about some of the quick press conferences we get. Anyway, let's get back to market, Stephen, because
the bond market.
The bond market's had a weird week. We've got bonds at the long end of the curve. Now, you'll hear people say that. It just means the long-dated bonds, so the 30-year bonds. They're going up all around the world. So the gilt, the US, the UK bond market, the UK bonds are called gilts. 30-year gilts are at their highest point in 27 years. The US 30-year Treasury yield touched 5% overnight, and it did retreat after that. So that's positive. But we've got German 30-year yields and French yields all at decade highs. And this is all about governments around the world getting worried about the combination of big debt loads, but central banks cutting rates at the same time. So you've got this sort of weird fear if you're holding these long-term bonds. Well, hang on, I'm going to get inflation. There's the potential for inflation as official interest rates are cut, and then at the long end of the curve, I've got the chance for that inflation to be embedded because governments have been so profligate over the last 2 decades, and that's basically a problem they can't get out of. So yeah, I
thought it was interesting that the one of the reasons there's a bit of a wobble in the US was that the courts sort of struck down $900 billion worth of Trump tariffs. I mean, there'll be appeal, I guess, but there was a big setback on the tariff front, and people are sort of saying, "Oh, this is going to blow out the US deficit, which is already at 7% of GDP and 37 trillion." So, the best thing about the tariffs was that it is a partial budget repair measure. But If the courts have struck that out, then you've obviously got to go back to other levels of tax. But yeah, look, the world's living beyond its means, isn't it? And the markets, the bond vigilantes are starting to say, there is a limit to this.
Yeah, I did a piece this morning, Stephen, and it's all related to this. The price of gold just keeps hitting a record basically every day. Now, gold loves falling interest rates, and it loves when there's inflationary periods, and it loves when there's periods of geopolitical risk and risk to the great institutions of the world like the Fed. So gold's having an absolute party at the moment. Goldman Sachs reckons the price by the middle of next year could be 26% higher than it is now. But I guess it's good if you're a gold bug. But for the rest of us, for real people and for the rest of markets, it's not a healthy sign, I don't think.
And it's amazing how people don't talk about. I mean, how many times have we been asked about we're under-taxing oil and gas? Why aren't the big gas producers paying more tax? I mean, look at the gold royalties in Western Australia. They're 2.5%, and it's free. It's free for the first 14 million at the current prices. So we've now got 15 companies in the top 150, which are gold producers. So everyone is making an absolute fortune, and the WA government has got these tiny royalties of 2.5% after you've made your first 14 million in sales. I mean, we're going to get onto property taxes shortly, but hello world, talk about the taxes on gold. I mean, people forget that the gold industry was exempt from company tax, the corporate income tax, until Keating finally introduced in 1991. They were so privileged. They were like the Catholic Church and every charity. They didn't have to pay company tax until 1991, and they've still got this incredibly privileged low royalties regime, and they're making out like bandits at the moment, which is great for their companies and profits. And Northern Star's now worth 20 billion, and Kerry Stokes privately has got 200 million in that, and there's all sorts of new millionaires being minted, but there's no debate at all about royalties and the owner of the assets, the WA government particularly, getting their share of a once only government-owned asset sale.
I think you and I need to go west and see if we can get our hands on a little tenement, Stephen. If you can't beat them, you've got to join them, surely. Mayne and Thomson Gold Co. We'd have to get a better name than that.
Yeah, it is. I mean, I follow every single EGM of a small company, and there's so many Perth-based miners that raise 20 million and then have a special shareholder meeting to approve it and get on with it. But the metals are also different. I mean, lithium's been an absolute basket case because the price literally crashed by 90%. You've obviously got the iron ore, which is longer and stronger forever, it seems, but rare earths, that's sort of up and down, but there is quite a bubble in some parts of rare earths, particularly with the whole military thing. But gold is actually the biggest story of all. It is just, I mean, we have now left 30 billion on the table when we sold 2/3 of our gold reserves, Howard and Costello, at literally 1/10 of the price today. I mean, that was the stupidest decision ever taken from a financial sense by an Australian government, and we're not even trying to get it back with proper taxes anymore.
Yeah. No. Well, look, it's a good time to be a gold bug, but it's maybe tough times for the rest of us.
It is actually about, though, a hedge, isn't it? When governments are printing money in crypto, I mean, there's inflation. It's the ultimate protective, defensive investment. And a lot of the analysts are saying it's going to go to 4,000. I mean, it's not finished yet in this crazy, wild world.
Yeah, Goldman Sachs is. I think their base case for next year is 4.5. $4,000 is their mid-2026 baseline. That's in US dollars for an ounce. But they're saying that their sort of tail risk upside scenario of 4,500 an ounce is now in play because of these threats to the Fed's independence from Trump. So look out.
It is going to be interesting, actually. I mean, people think that the US is lively at the moment. I mean, think about the next month. You've got things could be coming to a head with the Fed. You've got the pressure on for another rate cut. You've got potential government shutdown in October 1, which is where it's going to roll next. RFK in the hearings, narco wars, invading Chicago. So, it's actually... I don't think it's going to calm down. I think potentially it's going to get even more volatile, which is all good. It's all good for gold. But, I mean, gold doesn't generate a return. This is the weird thing as an investment. Yeah. I mean, then again, we could talk about Bitcoin. I mean, it's the same concept, isn't it? An alternative to government-reliant assets, limited supply, a hedge.
Yeah. Well, there's another emergency, Stephen, coming in another national emergency coming in America, according to Trump and Scott Bessent, the Treasury Secretary, and that's in housing. The Trump administration's threatening to call a national emergency in housing as they head towards the midterm elections, and housing. They're going to make housing affordability a sort of key part of their election plank, which is. That news came through, interestingly enough, on Tuesday morning as I was at the Australian Financial Review's property summit. And what struck me, I think, was the contrast that, this housing affordability crisis is a global problem. It's happening everywhere. The fact that Trump is seizing on the sort of political problems that housing affordability causes is really interesting. I think the good news, I'd say, is that we've already probably rung the bell on our housing emergency, and it's starting, very early signs that it's that bell ringing starting to have an effect. I think what was really interesting at the property summit was there was praise for Labor, particularly Claire O'Neill from the Property Council, who are usually pretty adversarial when it comes to government policy. Then Mike Zorbas, the CEO of the Property Council, he called Claire O'Neill the most activist minister in a generation. Wow. And said that that Labor's approach to the housing affordability crisis had given permission for state planning and housing ministers to be able to walk into their cabinet rooms and basically blast NIMBYs. And say, we're not going to stand for this. And, there's examples in Melbourne of that, and there's a very prominent example in Sydney at the moment with Woollahra, which is a well-to-do suburb where the government wants to put a whole bunch more units. So, I don't know. I know this is usually Alan's territory, Stephen, but I was actually struck by the slightly positive tone coming out of the property summit.
I read your column as well on the living sector, and I thought that was fascinating as well. And we do have to talk about the taxes as well, because Avio, which is an enormous giant of the retirement village or the living sector, was sold for 3.85 billion. That was the headline figure, according to the Canadian giant Brookfield. Mark Carney's old company sold out for 3.85 billion, and I was amazed that the CEO Craig Karacha said more like 4.5 billion, because you've excluded all the taxes we had to pay.
Yeah. And this comes back, Stephen, the deal. The deal was done by the Living Co., which is this used to be called Scape. Basically, they're concentrating on student housing and aged care, so the two ends of the spectrum there. The financing from that came from Korean investors.
Well, the Korean National Pension Scheme put up the entire $2 billion of equity, didn't they?
Exactly. So, and because they're foreigners, that comes with all sorts of extra tax imposts, particularly in Victoria, where we have a regime that's particularly unfriendly to foreign property investors, which was a subject of much debate across the property summit. So, this is the sort of issue we've got. We need to attract this foreign capital, but we're putting up some hurdles for it to climb over.
Well, this is the property owner's dilemma, is you really are a prisoner. You can't ship your property offshore.
Yeah.
And so, one of the great problems of Australia is we've got the most lopsided federation in the world, where the states do most of the work. You've got to literally run the cities, spend $26 billion building the Northeast Link in Melbourne, and they've got very little of the revenue because they've got no company tax and they've got no income tax. And this explains why we're the world's biggest gamblers, because one of the few things state governments can do is issue gambling licenses like confetti, because they desperately need the money. It also explains why Macquarie is the world's biggest owner of infrastructure, because you had all these state governments that were selling off toll roads and power stations to Macquarie in the 90s, and they got first mover advantage, and then they rolled that out to the world. And it's also why we've got the world's biggest toll road company, Transurban, which dominates Melbourne, Sydney and Brisbane, because the state governments haven't got enough money. So they come after the property sector big time, because it's all they've got. And of course, foreign investors get hit the worst in Victoria because, they don't vote. So who cares about them? So you've just got these outrageously high taxes. The other thing is, I remember voting for a few Scape student planning applications when I was a City of Melbourne councillor.
Oh, there you go.
And they were booming. And Melbourne Uni came in and said that the Parkville campus of Melbourne Uni has got, now it's 14,000 international students, which is the most of any campus in the world. Melbourne is one of the 4 biggest international student cities, along with Paris, London and New York. And then our officers were saying, 42% of the residents in the city of Melbourne are students. So people forget that Melbourne, post-manufacturing, it is very much an international student city. It's a 24-hour city. Jeff Kennett's decision to totally deregulate retail trading and retail operating hours meant that it's got an amazing nighttime economy, and people like Scape emerged to service that. And now you can argue we're seeing, blowback with, anti-immigration marches and that sort of stuff. So that whole balance between, supporting the property sector, the student economy, and people saying, there's too many people marching against it, it's quite a delicate area to navigate.
Well, particularly, Stephen, if you're in the property sector, you want that immigration to continue because A, it brings more customers, but B, the clear issue the practical issue for the housing crisis is we just don't have enough builders, and that came through very clearly at the property summit. Like Nigel Sadley, who's the sort of king of housing development in West Australia. He was saying that a 4-man team of bricklayers or sparkies working over in Perth, the leader of that team, $500,000 a year. The other 3 blokes in the team are on, or girls are on $1,000 a day. So $250,000 a year.
Wow. I mean, if you're white collar and worried about AI, learn to be a brickie. I mean, this is it's interesting. I mean, I loved your interview with the NAB CEO this week, who said, white collar workers who refuse to work with AI don't have much of a future. And then he actually had a whinge and said, we brought in 700,000 Australians last year, or migrants last year, and only 5,000 were skilled tradesmen.
Crazy.
I thought that was a very interesting comment for a bank CEO. And he was also complaining about the planning conditions on building a deck in Victoria, and it took him too long. And so that's very punchy stuff from a relatively new bank CEO, and they were very powerful points he was making.
Yeah. No, he was getting stuck into Australian complacency. So, look, I mean, there's a bit of zeitgeist around this, isn't it? Economic Reform Roundtable, bank CEOs coming out and saying, let's go. So I think it's probably pretty healthy to have some of this debate, to be.
Yeah, and you even had the first I think it was Ross Gittins, your first economic commentator, saying, do something, Albo, or retire.
Yeah.
I thought that was quite early into the second term to be having the Keating/Chalmers push. We want the reformer to take charge. Off you go, Albo. So,
yeah.
Now, James, we need to get on to questions, but before we do that, here's a quick word from our sponsor.
Think investing's out of reach? Think again. With InvestSmart's Fund Later, you can own a $10,000 ETF portfolio with just $4,000 up front. Fund Later covers the rest, lending you $6,000, which you repay over 20 monthly installments, including a facility fee. There's no interest, no margin calls, and no waiting. Whether you're new to investing or a parent looking to give your kids a brighter future, it's a smart way to fast-track your investment journey. Choose from 4 expertly managed portfolios and get $10,000 working for you from day one. Learn more at fundlater.com.au. Terms and conditions apply.
Okay, so Josh says, I was interested to read about the recent coverage of Reece, particularly in the AFR, and your comments about how the lack of new renovations are hampering their revenues. What do you think the declining interest rates in Australia and New Zealand will do to Reece's Australian business, albeit with the stronger competition from TradeLink? Are declining interest rates good for trade businesses, or does the influx of home buyers hurt revenues? Well, I mean, the whole Reece situation it's also an amazing corporate situation as well as the read on the economy.
I've been dying to ask you about this, Stephen, because you're the only person I know who's been to Reece AGMs. I remember your tweets and missives from the Reece AGM. This call was an amazing moment in reporting season. Basically, Peter Wilson, who's the son of one of the founders of Reece, the plumbing supplies business, got on the call and confessed how bad the business was going. His sort of voice was wavering. He was paranoid. He was saying our competitors are listening to the call. I haven't heard anything like it. But is this, and it seemed very un-Reece-like, Stephen, from what you've seen at the AGMs, right? They usually never complain, never explain.
Well, that has been the approach, but they also, they used to do, 6 ASX announcements for the whole year. I mean, Peter's dad, Alan Wilson, told me to sit down after 2 questions. After 14 minutes into the meeting, he'd give these monosyllabic answers. They still won't even publish their constitution on their website. It's on my website, but not on theirs because, they're so secretive that why should we publish our constitution when every damn company does that? So they just have this culture of sort of secrecy, but they issued $780 million worth of new shares to institutional and retail investors to fund their $2.2 billion US play, which is going badly. So they actually have to start respecting their shareholders. And their profits in Australia have started falling as well. They're complaining about work from home and people aren't, doing enough new builds because, the cost of construction. So, yeah, look, it's one of the AGMs I'm most looking forward to going to this year.
Yeah.
Because they don't do investor days. They don't have meetings with fund managers. I mean, the family's still got 63%, but the stock's down 65% from the peak in a year. So it's the first time they've really hit headwinds. The CEO's sounding very wobbly. The old man at 84's just finally left the board in February after being the dominating figure. He's now chairman emeritus, just like Rupert. So it's a really interesting situation.
I reckon I might join you at the AGM. But to answer Josh's question, yes, declining interest rates should be good for trade businesses, as it will get housing construction and renovation activity going. But I don't think it's going to move the dial for Reece, just because, as Josh says, that the competition from TradeLink and other players is a lot stronger at the moment. So, yeah, I think this is more of a micro issue with Reece rather than a macro issue with rates or the economy. They've got a bit to fix. Okay, question from Tree. They said they were quite surprised when we were discussing NVIDIA's latest quarterly result, and you discussed that there were no companies with an annual net profit of more than 100 billion. From their last checks, Google, Microsoft, Apple profits were above $100 billion on a run rate basis. Can you check and confirm? And Stephen, you have done that.
I've had a look, and Tree is correct. If you annualize the latest quarterly profits from those big four, Alphabet made US $28 billion in 90 days, Microsoft $27 billion US, Apple $23 billion, and Nvidia $26 billion. So all of them, and certainly in Australian dollar terms, you're talking 150 billion. So they are earnings that you can defend a $3 or $4 trillion market cap on, because there's never been any companies in the world that have got anywhere near this. And to have a cluster of four of them making over, $100 billion US a year, which is where it'll probably land in the current financial year. I mean, it's almost like, well, who cares what Trump does? You got the American hegemony in big tech and owning the highways and the byways of the computer world. The internet is a phenomenal advantage, and we've never seen anything like it, with a small number of big companies dominating globally with enormous pricing power.
Yeah, absolutely. Do you want to jump to Norm's question, Stephen?
I do. My question is for James about Aussie cybersecurity firm CyberCX, which just sold to Accenture for $1 billion. See the Street Talk article. Are Australian investors losing out when strong local tech firms like CyberCX get bought by foreign companies? Why wouldn't the current owner, Melbourne-based private equity firm BGH, list them on the ASX instead?
Well, there's two questions there. Are Aussie investors losing out? Well, not entirely, because BGH, which is a Melbourne private equity firm, is backed by super fund money. Not just super fund money, but there's plenty of super fund money, including from Australian Super, in there. So we're in direct winners, which is good news. The question of whether it would have been better to see a business like this listed on that ASX, well, yes, I guess it would have. I'm not sure, though. BGH would have considered that, and it would have tried to figure out what the best bang it could get for its buck. Some businesses are better suited being folded into another larger business rather than being floated on the ASX to stand alone. And I think that's probably the decision they've reached in this case.
I think that also there's a special situation with BGH. The G in BGH is for Gray, Ben Gray, and he was the boss of the US private equity firm TPG when they floated Maya for $4 billion. Investors have lost $3 billion, and it is still the most famous never buy off private equity story. So if BGH ever tried to float anything, all we'd hear about in the lead up would be what happened when Ben Gray last tried to float a business. And so there's a bit of a rule about be careful buying off private equity. And I was also interested this week that there's a company called Atomic, which is basically, I see them all the time at AGMs. They're a startup challenger in the share registry space. They've just been sold to a US private equity firm for $750 million. When they're not even making a profit. They're still in sort of growth mode. So the prices that private equity are prepared to pay is quite amazing. And we are going to see the ASX continuing to thin out, because you get a better price selling to private equity than you do floating on the ASX. And many of our ASX companies are getting picked off. I mean, just this week, Caterpillar, the giant American
Yeah.
big trucks, mining equipment type company, has offered $1 billion for RPM Global, which is this great mining software company. Few people have heard of it. It's been on the ASX for a while. Bang. They've agreed to sell. Well, it's not deal not done, but Caterpillar's going to snap them up. We've lost Johns Lyng. We're likely going to lose Iris as plays for Webjet. So there's already been 22 takeovers completed this year worth more than 100 million, with not many floats to rebuild the stocks.
No. Good point. All right, Andrew says, I often hear Stephen say Australia exports iron ore or Australia exports LNG. In fact, the likes of London-based Rio Tinto, BHP and Fortescue and others export iron ore. And Woodside, Chevron and others export LNG. Can you please elaborate on what you mean when you say Australia exports LNG or iron ore, particularly as the Australian government really has no control over volumes or prices or destinations of these exports?
Well, I mean, look, Andrew, it's a bit of a moot point.
Bit of shorthand, isn't it?
Yeah, I mean, obviously we're saying, resources sourced from this country are being sold. And as Trump has shown when he's, put export licenses or export bans on NVIDIA chips into China, governments can be massively powerful in terms of what is exported to who. And if they can do it to NVIDIA, they're even more powerful when it's stuff the government owns that's in the ground, the extractive industries, oil, gas, gold, you name it. So you do need an export license. You need approval from the government. So there's many, international deals involving governments agreeing to buy oil or buy resources. And then obviously it's private companies that actually do the digging up often. I mean, obviously in the United Emirates, a lot of these are government-owned oil companies. But generally, I don't think you should really need to distinguish. But what about Santos, James? I reckon the Santos takeover is going to be blocked because the idea of the ADNO, the national oil company of the United Arab Emirates, controlling such an important strategic company, I just reckon that's going to be a bridge too far to have a foreign government controlling one of our second biggest listed oil and gas company. What do you reckon?
Yeah, it could be right. I think it's going to be close to call. Maybe they'll make some promises around East Coast gas supply. And what they can do there, and they've got obviously really deep pockets to make those promises, to support those promises with. Yeah, so I don't know. I think it's a bit more line ball, but let's see.
I thought because the AWU, the Australian Workers Union, they've been going very hard against it, and they are factionally the sort of the power base behind Jim Chalmers as well. So I reckon that makes it extra difficult to get approval. But look, we will see. I'll let you pick the next question, James.
Okay, let's go with Ron's, and he says, "Love the podcast. Could you contribute to your children or grandchildren's super accounts, or start one for them when they get to the eligible age requirement as a way of helping them set up their future? I realise they won't get it until way later in life, but by starting early enough, maybe they won't have to contribute as much personally during their lifetime."
Ooh, look, of course you can do that. But, wow, you're locking it up till they're 60. I reckon kids and grandkids might just say, how about a bit of help with my HEX debt or the first home purchase or the mortgage? It's just such a long play. Maybe you can make the argument when your kids or your grandkids are in their 30s, 40s, 50s. But I think, someone turns 18 and you start putting money into a super account. I mean, it is the ultimate long-term savings plan. You've got to wait 42 years before you can get it, and the government's locked up, and the government can always change the rules as well.
Yeah. I agree with you. I sort of the other thing I would say, Stephen, is the kids are going to be mandated to make contributions. So
12%. That's right.
Yeah.
The government's forcing them, so that's happening anyway.
Yeah. So can you really limit? I mean, you could reduce the extra contributions they need to make. But you're not going to – I'm just not sure you're going to turn the dial all that much and protect them that much. So, I don't know.
Now, Sam says, I was listening to your podcast last week when you discussed Jackson Hole and the many impactful presentations held there. I'm curious, what are some of the most memorable or impactful presentations or speeches you've attended in person or seen online during your career? Any field, James, have you got any absolutely, blown away presentations that that you can remember at this point?
Oh, wow. I've been thinking about this, and I think I see a lot of political, both the political and corporate presentations I see are so, carefully prepared and clearly rehearsed. I think that's sort of counts against them. One I saw from Mike Henry a couple of years ago, which I think he was made some really good early points on. He's the BHP CEO, and he made really put in around some good numbers around the idea that Australia's prosperity over the last 30 years has been built off really big exports of commodities to China. And his point was that China's changing. We can't rely on those forces, those big iron ore, those big royalty checks and tax checks from iron ore and coal to support the economy for the next 30 years. It really stuck with me at the time, and it's stuck with me since, because I just don't see much recognition of that fact in the rest of society. So that's one it wasn't necessarily the passion with which it was delivered, but it was the sort of starkness. And I'll keep coming back to that Reece thing. I know there's a risk of recency bias, but it was just so off script. It was just so different to what you're used to from presentations that it really, when someone goes off script, it's exciting. I think that's my rule.
No, I think at the time we both also loved that initial Chemist Warehouse chat with analysts when the deal was done with Sigma, and they came out, because they'd been so secretive over the years. They came out and they said, "This is Chemist Warehouse," and it just blew everyone away, the scale of the business. And now, of course, who's surprised that it's worth 35 billion, and that it's minted so many billionaires. In terms of AGMs, I always find the people who are evangelists. So Twiggy Forrest will just evangelize. I mean, sometimes it's, you can call them the great exaggerator. Owen Hegarty used to be the number one sort of evangelizing CEO. And then even Chris Ellison last year at Mineral Resources. I mean, he was in a world of pain, all sorts of governance issues. The chairman read his script, handed over to Chris Ellison and said, "Righto, Chris, say a few words." And he evangelized for 40 minutes. It was ridiculous in the circumstances. And the chair did not let him answer a single question after that. So I do find how people handle the AGM situation to be very interesting. Alan Wilson at Reece would literally read 4 sentences every time and then hand over. I also have to admit, in terms of being impressed, I actually was impressed by Jim Chalmers when he handled us for an hour on the Money Café earlier this year. I mean, I don't want to be political, but in terms of someone on their feet, no notes, handling questions for an hour and debate, I thought that he was pretty impressive.
He was at the top of his game. That's true. That's true. Susan says horse racing worldwide is on the nose, but Fox Corp, controlled by the Murdoch family, has decided the sport is underappreciated and is boosting US broadcasts. Fox has also taken a 25% stake in online betting platform NYRA Bets, allowing it to tap the $150 million sports betting market. Is Australia at risk from Murdoch stalking betting, or since the failure of Murdoch's Better, has it accepted the tab can't be surpassed?
Oh, look, where do you start, James, with the Murdochs?
Well,
I mean,
let me start by dissuading Susan of the knowledge that the tab can't be surpassed. The tab's well and truly been surpassed. The tab's had its lunch and its play lunch and its dinner and its breakfast eaten by online bookies like Sportsbet and Ladbrokes and others. So, but I don't know what you think, Stephen.
It's basically Sportsbet and the rest in Australia. But look, Gillon McLachlan, his first full year result last week, shares up 20%. Tabcorp made $37 million profit. Tabcorp's back to being worth $2 billion. So, is Gill going to be the saviour? I mean,
he's the toe cutter at this stage. It gets harder from here. But
that's true.
But Stephen, I don't think I don't think the Murdoch. I mean, yes, the Murdoch's having a crack at betting in America, but I think they've been burnt badly in Australia, really badly.
Oh yeah, well they lost 40 million in better. I mean, people don't realise they made B literally made a $2 billion profit building and then selling what was called Sky Betting and Racing. So they had the monopoly over the UK Premier League football, and they just bolted on promotion of their gambling business, which was ultimately sold to what is now Flutter, the owner of Sportsbet. So when they had that success, they tried to do the same thing in Australia, failed. They tried to do the same thing in the US with Foxbet, and they lost quite a lot of money to start with there, and that's now dominated by the fantasy sports players like FanDuel. And DraftKings are the two dominant players, and Flutter is big in that. But look, people try and put gambling and sport together. So if you're a big sports broadcaster, then there is a natural sort of adjacency and synergy. And the Murdochs did have a big payday in the UK, but they haven't managed to copy it elsewhere. So now we'll finish with one more. I think Anonymous says, asking about attending the recent Straker Limited AGM, and then actually I was surprised that I asked a couple of questions and was trying to know how do you work out which AGMs to pick, and the AGM season is coming up, James. So I don't know how do you pick it? Well, look, I've done I think 1,122 so far, including I think I worked out it's 278 since I went full time on October 1 last year, which is the first time. So look, if they're having an online component so you can zoom in, I'll buy in and do that. I've got a bucket list of companies that I've never harassed, so you always try and get to each company once just to give them a workout. And then it's a bit news-driven as well. If there's something happening in the news, if there's a disaster, if Chanticleer's written a stinging column, or Street Talk's got a leak on another capital raising, there's good journalistic issues. You sort of back the journos up, and you go along and ask a few questions, because the great thing about the AGM is that these powerful people cannot tell you to go away, cannot tell you it's off the record. They are forced to answer your questions. And that's something that journos can't always do, because we're relying on people to return our calls and give us interviews.
You asked some great follow-up questions from my reporting at the Macquarie AGM, for which I was very grateful. How do you think, having gone full-time from it last year, do you think you're being better received than you were in the past? Or do you get chairmen who like the back and forth, or are you a nuisance still?
Oh, look, still largely nuisance. I am having a bit more engagement with the odd billionaire and the odd CEO. I'm finding that some people are saying, well, you've been harassing me for 25 years. We maybe should have a chat.
Yeah.
So it's a little bit, I get one chair rings up and says, I'm doing everything you want. I'm doing early proxy disclosure. I'm disclosing how many shareholders vote. I'm going to do a transcript. I'm going to follow the agenda. And I say, fine, I won't come to your meeting, So some of them try and sort of suck up. But overall, I've been really happy with the level of engagement, happy that companies often do agree to your requests, like early proxies, publishing a copy of the webcast. But there's still many recalcitrants. Most of them are billionaires often, the Harvey Normans or the Kerry Stokeses, who still run dinosaur meetings. So you have to fly to Perth to ask questions of Twiggy Forrest, because he didn't like the fact that I asked him, 15 when he was beaming in from Paraguay, I think it was, during COVID. And then he's just banned online questions ever since. So we are the best in the world in terms of the amount of companies that hold hybrid meetings or have online access. And we're the greatest shareholder nation in the world. So one of the reasons I do it is if it's use it or lose it. If you don't have someone actually asking questions online, they'll just say next year, well, we're not going to bother because no one did it, because I'm usually the only person asking the questions. And so we need more people asking questions, holding people to account, because when the government forces everyone to be exposed to the share market through super, it really matters who's on these boards, managing the people's money, and that there's a good culture of shareholder pressure. And too many AGMs, there's no debate at all.
Yeah, here, Stephen. You're doing God's work. So I'm going to send a message to Anonymous, who asked the question. get in there and back Stephen up, ask a few questions yourselves, and
Correct.
that'll be. It just makes the meetings more fun too. Like,
That's right. $500 is pay to play, and then you sell the shares afterwards, and it's fun. And you can just cut and paste your written question in, and then you can go and make yourself a cup of tea, and they'll read it out at the end and answer it live. So that's the beauty of it. Anyway, we're over time, James. We better wrap things up. So thanks for listening to today's episode of the Money Café. I'll be back next week with the boss, Alan. So send in a question and we'll answer it together by emailing the moneycafe@eurekareport.com.au. Until then, I'm Stephen Mayne, contributor, intelligent investor, founder of Crikey and shareholder advocate.
And I'm James Thomson, senior Chanticleer columnist at the Australian Financial Review.
Talk to you soon. Over and out.